Hello, today is Monday. It is the 17th of September 2012. This is what I'd like to call that, and many other traders would call this a bull flag. And this is as by the book as you were going to receive, where you go pretty much straight up, and this one was straight up. And then you have some sort of sideways consolidation, but you don't go too deep within your pullback. And this is obviously the perfect look towards it. Now, the range is approximately 57 cents. Now, I did a video on Thursday on the breakout day showing a split-second gain for that of 57 cents on, of course, the Thursday session when Big Ben Bernanke, used to be called Helicopter Ben. Maybe other people still refer him to such. But he opened his mouth, QE3 is on the way, and then, of course, there is the uptick. And when you see this bull flag pattern, that's a form of markets correcting sideways through price. Now, the Fibonacci low that I have put on here is this one here. For the most part, I take the lowest low, which would normally be here, and the highest high. And sometimes you don't do that, this of course being one of those times. Now, why would I take this low, which is higher than this one, in calculating what the most important short-term Fibonacci retracement would be? And the reason for that is because this was the area from where the breakout had originally occurred, and that trumps that low over this low as well. So now we got to say to ourselves, well, is this it for the silver market, at least on the intermediate term time frame? Well, yesterday I did a video on the US dollar index showing that it's putting a lot of weakness within the charts, or that's what the projected future is looking in the next few weeks and months. And with that being said, usually gold and silver would go higher. Now, the next one we're going to look at is the gold to silver ratio, and this is a pattern I've been showing for a little while now, which continues from where silver and gold topped at the end of February, and of course this high. So the gold to silver ratio bottomed at the end of February at about 47.75, and it topped at about 59.25 back in here. There was absolutely no support found at the first significant Fibonacci level, and there was absolutely no support found on the second significant Fibonacci level. When you are unable to hold the second level, so in an uptrend going down, this is level 1, this is level 2, then this is pretty much telling us that the move that we've seen is that of a failed move. Now, it hasn't confirmed this by any means. This could still be a pierce below this line, but definitely a reason to keep your eye on this and say, hey, wait a second, there really was no support here. There really was no support here. What does this tell us? Well, this tells us that this most likely is going to continue to head lower. And if this does manage to pretty much stay below 53 and break down below 50, that the test of about 47.75 is going to come into play. But more importantly, that also means that the legs higher for gold and silver on the short term, which is the rest of September into October, should continue to be that of bullish. And thank you for tuning in to today's video, and have yourself a great week. Bye-bye.